Hello everyone, welcome to day 6 of our marine cargo course. Today we are going to talk about something everyone wants to understand, the cost of marine cargo insurance. We will break down what premium is, what factors make it go up or down, how to calculate total value you should insure your cargo for, and some smart ways to potentially save on your insurance cost. By the end of the session, you will have a much clearer picture of how marine insurance pricing works. Let's start with the basics. What is a premium? In simple terms, the premium is just the price you pay to the insurance company for your coverage. It's the cost of having that financial protection for your cargo. This premium is usually calculated as a percentage of what we call the sum insured, which is the total value you are insuring your cargo for. We will talk more about sum insured in a moment. Now let's look at the factors that directly influence how much you will pay for your marine cargo insurance. First, the type of cargo itself is a big factor. Think about the nature of your goods. Are they fragile, like glass? Are they hazardous, like certain chemicals? Are they perishable, like fresh foods? Or they very high value, like luxury cars? All these types of cargo carry high risk compared to, say, robust, low value items. Naturally, high risk cargo means high premium. Second, packing and packaging are incredibly important. How well are your goods packed to withstand the journey? Are they secured properly in the container? If your cargo is poorly packed, it's much more likely to get the damage during transit. This increases the risk for the insurance company, so they will charge you a higher premium. Good, strong, and appropriate packing can actually help you reduce your insurance cost. Third, the voyage or the route plays a significant role. Are you shipping through geographical regions known for piracy, like certain parts of the Indian Ocean or areas with political instability? What about the length of the transit? And how many times will your cargo be transferred between different ships, trucks, or trains? Risky routes or journeys with many transfer points increases the chances of something going wrong, which means a higher premium. Let's continue with more factors that influence your premium. Fourth is the mode of transport. Whether you are shipping by sea, air, road, or rail, each method has a different risk profile. For example, air freight is generally considered less risky than sea freight because it's much faster and involves fewer handling points. This difference in risk directly affects your premium. Fifth, the vessels or the carrier quality matters. How old is the ship or the truck? What condition is it in? And what's the safety record and reputation of the shipping line, airline, or trucking company you are using? Older vessels or carriers with a history of incidents are seen as a higher risk, which will lead to higher premiums. Choosing reputable carriers with good safety records can help reduce your cost. Sixth, the Institute Cargo Clause, that is ICC, you choose, which we covered yesterday, directly impacts your premium. If you opt for the broadest coverage, like ICC-A, which covers all risks, you will naturally pay a higher premium compared to a more limited ICC-B or C. More comprehensive protections comes at a higher price. Now look Now let's look at the final few factors that influence your premium. Seventh is the deductible or excess. This is the amount you agree to pay out of your own pocket for each claim before the insurance company steps in. It's like the first portion of the loss that you cover. If you choose a higher deductible, meaning you're willing to pay more yourself for smaller claims, your insurance premium will be lower. Conversely, if you want the insurer to cover more from the start, you will choose a lower deductible and your premium will be higher. It's a balance. Eighth is your claim history. Insurance company look at your past performances. How often have you made claims in the past? And how severe were those claims? If you have a history of frequent or very large claims, insurer will see you as a higher risk client and your premium will likely to be higher. A good, clean claims history can help you get more favorable rates. And finally, the Incoterms used, which we covered yesterday, also have an indirect impact. While Incoterms don't change the actual premium rate for the cargo itself, it clearly defines who is responsible for arranging and paying for the insurance. For example, under CIF terms, the seller pays for the basic insurance, but under FOB terms, the buyer is responsible for arranging and paying for it. So it impacts the cost of for each trading party. Now let's talk about how to calculate the sum insured. This is a very important number because it represents the maximum amount the insurance company will pay you if your cargo is completely lost or severely damaged. The standard calculation for the sum insured typically includes three main components. First, the invoice value, which is simply the actual cost of the goods you are shipping. Second, you add the freight cost, which is the cost of transporting those goods. And third, it's a common industry practice to add an additional 10% or even more. This extra percentage is there to cover consignment cost, unexpected expenses like custom duties you might still own, or even a small amount for the profit you would have made if the goods had arrived safely. So the simple formula is sum insured equals cost plus freight plus insurance plus that additional 10% or more. Calculating this correctly is vital because it ensures that if a loss occurs, you get a full recovery that covers not just the value of your goods, but also those associated costs you might incur because of the loss. Now for some practical advice. How can you potentially optimize or reduce your marine cargo insurance premiums? First, improve packing. This is a big one. Investing in robust industry standard packaging for your goods make a huge difference. Better packing means less risk of damage during transit, and less risk for the insurer means they can offer you lower premiums. Second, choose reputable carriers. Always select shipping lines, airlines, or trucking companies that have excellent safety records and a good reputation. Insurance companies prefer to insure cargo on reliable carriers that can translate into better rates for you. Third, implement loss prevention measures. Don't just rely on insurance. Actively work to reduce the chances of a loss happening in the first place. This includes things like proper loading and stowage, good security measures, and using tracking or monitoring technologies. Fewer losses for you means fewer claims, which can lead to lower premiums over time. Fourth, review your Incoterms. Make sure the Incoterm you choose for your sales contracts align perfectly with your insurance strategy. This helps you avoid paying for coverage that actually your trading partner responsibility, or even worse, having uninsured gaps. Fifth, consider higher deductibles. If your business is financially stable, even though to observe smaller losses out of your own pocket, opting for a higher deductible will directly reduce your premium. It's a way to take on a bit more risk yourself in exchange for a lower upfront cost. And finally, negotiate with brokers or insurers, especially if you have a large volume of shipments or if you have maintained a good claim history. Don't be afraid to negotiate for better rates with your insurance broker or directly with the insurance company. They value good clients. So that concludes our discussion on marine cargo insurance premiums. I hope this gives you a clearer understanding of what goes into the cost. Now, I'd love to hear from you. We talked about many factors, but beyond just the type of cargo, which factor do you think has the most significant impact of premium rates and why? Please share your thoughts and insights in the comments below. Thank you so much.